Hello everyone, welcome to Pinchu TV Global Market Wrap. This podcast is intended for general information and market commentary only. It doesn't constitute investment advice, nor recommendation to buy or sell any financial instrument. All investment decisions should be made at your own discretion and responsibility. Let's take a look at the Philippine stock market as of Friday, the 30th January 2026. If I were to describe today's market in one phrase, it would be a technical rebound after heavy selling. After several sessions of weakness, investors stepped back into the market, selectively buying stocks that had been sold down too aggressively. The benchmark of Philippine Stock Exchange Index, or PSEi, rose by 1.7%, or 105.61 points, to close at 6,328.97. Meanwhile, the broader All Shares Index also moved higher, gaining 0.99%, to finish at 3,583.23. On the surface, this looks like a strong and reassuring rebound, but the real question is, why did buying? The primary driver was bargain hunting. In recent sessions, many stocks has been pushed lower not because of deteriorating fundamentals, but due to weak sentiment and macro uncertainty. Another important factor was renewed expectations of policy rate cuts. Following weaker than expected gross domestic product data for the fourth quarter of 2025, markets began to price in the possibility that the Bank Central Filipinas may have more room to ease monetary policy. While slower growth is not positive for the real economy, financial markets often interpret it as a signal that supportive policy measures may follow. Sector performance today was uneven but telling. The financial sectors led the rally, surging by more than 4%. Banking stocks was clearly the main engine behind the index gain. Bank of the Philippine Islands, BPI in particular, jumped by nearly 10%, making it the top performing index stock of the day. In contrast, mining and oil was only the sector of decline, slipping by around 1%. This divergence tells us something important. This was not broad-based risk-on rally, but a selective move focused on interest rate-sensitive sectors. Now, let's take a step back. Despite the strong headline numbers, market breadth was slightly negative. More stocks declined than advanced. This means that a handful of large-cap stocks were responsible for lifting the index, while the broader market remains cautious. Looking at the Philippine global markets were mixed to weak. US equities lacked momentum, technology stock faced selling pressure, and major Asian markets moved lower. Against this backdrop, the PSEi's rise reflects local dynamics rather than global shift towards risk-taking. Foreign investors were modest net buyers during the session, providing some support to the market. Total value turnover exceeded 13 billion pesos, indicating renewed participation, though not aggressive positions. Overall, investors' behavior suggests measured optimism rather than outright confidence. To be clear, today's rebound does not confirm full trend reversal. However, it does signal that levels around 6,200 were likely perceived as too pessimistic. Going forward, market will continue to watch inflation data, monetary policy signal, and global risk sentiment. In this environment, broad market bets may remain challenging, while selective position becomes increasingly important. That wraps up today's Philippine market wrap. Thank you very much for listening. I'll see you again in the next update. Salamat kayo. Amping. Take care.